Look, we're about halfway to the 90-day pause here in the tariffs. We're about 40 days in right now. 45 days would be May 25th. Jamie Dimon was out with a round of comments saying that markets have become too complacent at these levels. 10% down, 10% up. The effective tariff rates have absolutely jumped. It's a set of commentary that's music to Ilya Spivak's ears, which perhaps makes all three of us deeply unsettled. Either way, we find ourselves in a situation where the leader of one of the world's and the country's largest banks thinks that the worst is yet to come. Now, in fairness, Jamie Dimon has said things like hurricanes are on the horizon when those risks have never materialized in recent years alone. But looking at volatility, we have VIX that's been bouncing around back below 18. VVIX has absolutely flattened out. The VIX term structure is back in contango. So I suppose my question to you guys is, are we back in a normal market environment, or, Tom, is this a complacent market environment like JP Morgan's Jamie Dimon says?
Well, I mean, let's understand Jamie Dimon. Jamie Dimon has a shtick. I mean, you got to be fair about Jamie Dimon. His shtick is that he will only give a quote if it's negative. Like, one of the things that he does, being a good Chicago boy, is, and hanging probably around a lot of traders in his lifetime, the glass is always half empty. I've never seen him talk about a single thing that's not negative. Whether it's Bitcoin, whether it's equities, whether it's interest rates, whether it's the economy, every single quote he gives is negative. There's a bunch of reasons for that. One, it gives his analysts a little bit more room to. It looks like they're being more objective when his analysts have a different perspective on the markets. Two, it doesn't let his employees, doesn't give his employees any leverage. And he's got, hundreds of thousands of mouths to feed. And three, it always gives him a little downside insurance. So Jamie Dimon has never given a all clear ahead sign ever. I've watched this guy for 2 decades. He's never said anything positive in 2 decades. He's always a sky is falling guy. So I think it's part of his shtick. And B, you have to discount everything because it's just him. That's just what he does. Like, that's his shtick. There's nothing else to it. It doesn't mean anything. And if you ever heard him talk, like, the bad thing about the only thing that, he's obviously a great CEO because he's done amazing things with JP Morgan. But when it comes to markets, he almost sounds unintelligent. Like, he sounds like this is the first time he's ever talked. Doesn't he to you? Like, he stumbles along with like some ridiculous line of thinking every time, and I don't even get it. And I always think he's got to be doing this on purpose.
I never really noticed your whole thing that you said there about him, like, looking at it from half empty.
He's always negative.
You make a good point. I just went and Google searched Jamie Dimon articles, and they are all
everything's negative.
Public is too complacent about this. Public doesn't understand Bitcoin here.
Everything.
I mean,
I think it's a combination of him not wanting to give any leverage to his employees negotiating. I think it's a combination of not wanting to give counterparties any leverage. I think it's to try to keep everybody on his toes, keep the regulators away from him. I think there's all these reasons. So here's what I say about Jamie Dimon. He doesn't manage money. He's really good at what he does as a CEO, but beyond that, I wouldn't listen to a word he says. I don't think that's even the case. Now, I mean, I think after a 1,000-point rally, anybody can say, oh, we're a little complacent. We had a 1,000-point rally. Okay, fine. I think that's a reasonable, I think it's reasonable for anybody to say, hey, we're at the high end of the range. We've just rallied 1,000 points, blah, blah, blah. I have nothing wrong. I think there's nothing wrong with saying that, except I would like to hear that from somebody that sometimes is on both sides of the market. Like, he's a permanently negative person when it comes to his public statements. So I think you have to discount what he says. Find somebody more interesting. I'm saying that's on both sides. He's not. You
need your painkillers now, don't you?
He's not the person I think we want to quote on this network because he's never likes anything.
I think that's instructive into itself, though, right? If we're thinking about someone who is a prominent thought leader within the industry,
he's not a thought
guides
leader.
people's. I think a lot of people pay attention to what Jamie Dimon says.
They might pay attention to him, but they're mistaken.
May not be worth.
Jamie Dimon
may not be worth it.
Excuse me, Jamie. Sorry. Jamie Dimon is a master operator. He's a great operator. Like he's a skilled. He's probably one of the most skilled operators. He can manage a massive $1 trillion company, largest bank in the world, hundreds of thousands of employees.
Type, by the way.
He's a great operator. That's it. It stops there. He's not interesting when it comes to his market ideas or his, it's just not interesting. I find him. I
got to call it like I see. You got a little scoosh, Jamie Dimon, in you as of late. I
find him though to be incredibly inarticulate when it comes to talking about markets. He does not sound like he knows what he's talking about. He sounds a little bit off. So I'll just leave it there.
Speaking of CEOs, there was a headline that came out a few minutes ago, just as we started the show. Elon Musk has pledged to stick with Tesla for the next 5 years. Share prices initially rallied out of the gate, hitting a high just north of 354. Tom, I know that you were talking prior to the show about wanting to get in short names like Tesla and Palantir. Tesla since erased all those gains. It's now down to 343.47 right now. Obviously, Tesla is a big part of the consumer discretionary index, or rather sector ETF here. But when you look across the board the past few sessions, it hasn't been the growth names that are leading. SMH, XLK, XTL, XLY, they've all been lagging on the other side of the U.S. debt downgrade, which I think we all agree does not matter whatsoever. So, Tom, is this supposed to be the good news, right, that Tesla fans were looking for? Sign that Elon Musk is finally stepping away from the government. He's truly pot committed to his baby once more. If this is the good news that we're looking for, why aren't we rallying?
I think the scary thing for Tesla here is that it got that gap, that nasty gap up opening on like some kind of bullshit news, and then
Jamie Dimon,
and then now it's giving it up. I wouldn't touch Tesla.
Now it's giving it up. It's up $2 and change. I get it. It's off of its highs of 154, as Chris said, which was $10 higher than where it is right now. But the stock has rallied, if you want to go on a monthly basis, from around 210 to 344, really without a down.
I think it's way
extended.
I think it's grossly overpriced, but I didn't get short it yet. I'd like to rallies back up today. I think it's probably a pretty good short. It's on my list. I had Microsoft, Tesla, Palantir, and NVIDIA as my favorite short tip here.
No time like the present. If not now, when?
I mean, Microsoft's down pretty good today. Palantir's actually pretty strong. I haven't looked at NVIDIA yet.
I'm curious, as contrarians, again, listening to that Confirm and Send today, you guys were talking about your market approach. When you look at a stock like Netflix, which had a really big earnings report and then has continued to rally on the other side of it, how do you approach a name like that, which is seemingly a one-way street? Because as a contrarian, it's been obviously very difficult.
Challenge for Netflix, there's a couple challenges. One, I always worry about a split in that stock when it gets up to like, 1,200, because that's kind of their area where they like to get back to 100. The other thing with Netflix is, I don't know when last time you traded it. It's almost untradeable. Like, I would love to talk more about Netflix and even do some stuff in there.
Markets are $2 wide and the Ivy rank is 17.
The last time I traded Netflix, Chris, I couldn't even adjust my position. Every market was $2 wide. I couldn't even figure out where the spreads were trading. So if we sit here and we say, Netflix looks a little rich. Godspeed if you can figure out how to get filled in there at a decent price. I mean, you're going to give up 25 cents on every trade. Feels like it. So I don't love.
I personally don't. I personally don't trade in and out of that stock a lot, and I've noticed that issue as well. If you're going to trade something like that, you really have to take a longer term view, so it's worth the cost and paying the bid-ask spread. But if you're going to, it's very difficult to scalp in and out of on a short-term basis.
It's very difficult to scalp in and out of. You forget about scalping. You can't scalp in and out of Netflix. It's a difficult stock to trade just because of the width of the markets.
Well, that's really it. This week really is not a week for U.S. economic data for earnings, guys. We're going to keep an eye on what's happening in D.C. There's obviously the Trump budget making its way through the House. Good news for the three of us. It looks like the SALT deductions are going to be bumped up. So as blue state homeowners, looks like a little bit more money's coming down our way, guys. So cheers to that. Otherwise, I'll be back for Futures Power Hour in 3 hours' time. Hopefully people come back for that.
Thank you, Mr. Vecchio.